Well, this is something that's really, really, to be honest, worrying. Not and to be honest, the whole of the UK itself. This comes from I think it's the International Business Times. I think it is. It's the IBT, and the title of the article is called "UK Economy in Steep Decline. Is it becoming an emerging market?" Now, emerging market, you think, oh, is that a good thing? No, that's actually a step back from what we are now. And if that happens, that could have other massive repercussions to our economy. Massive repercussions. So, key points from this article. Britain has a volatile currency because of Brexit and an increasing dependence on foreign investors. Separation from the European Union will also hurt Britain's global profile, and Britain's role in Europe and the globe is clearly failing. So anyway, on to the article itself then. The economy of the United Kingdom has become so fragile, devastated by the coronavirus pandemic and uncertainties surrounding Brexit, that some analysts think it might be time to treat Britain as an emerging market rather than a developed nation. Like many emerging markets such as Turkey and Mexico, Britain has a volatile currency and an increasing dependence on foreign investors, and CNN has reported. And Brexit, separations from the European Union, could also see Britain's global profile and overall prestige damaged. The Bank of America recently noted that the British pound sterling has been behaving more like an emerging market currency. The pound has declined more than 15% in value since the 2016 Brexit referendum. We believe the pound sterling is in that process of evolving into a currency that resembles the underlying reality of the British economy, small and shrinking, wrote the Bank of America strategist Karma Sharma and Mira Kayomi. Sharma and Kayomi called the pound's fluctuation neurotic at best and unfathomable at worst. Only the Brazilian real is currently more unstable than the pound, they added. Thanks, guys. It's just, and we said this right from the very start. This was always going to happen. Brexit was going to cause massive economic damage to this country, and many Brexiteers and Brexit supporters just laughed it off as if that's not going to happen. Our currency is incredibly stable. And by the way, this is also going to have a definite implication on the tax havens we currently play host to. Because why are tax havens going to then leave their money, because that's what they essentially are, giant piles of money, on like the Cayman Islands or even on the Isle of Man, where currently a lot of these places are? No, they're going to go to other places because no one would put that much amount of money into a volatile currency that the pound is becoming. And that's incredibly dangerous. And that's going to have massive impact. One, it's certainly going to be good because certainly we can finally flush all these tax havens out, which will in some way be good, but it will be the only good it will actually do. The other thing is just there will just no investment. No one will want to invest in us anymore. I mean, it says a lot that our economy is going to become like Mexico's. That will have huge damage and repercussions for us. But, we only said this right from the very start. What we were called Project Fear. Well, as I've always said from the very beginning, Brexit is just a car speeding towards a wall of reality. And the driver is a Brexiteer, and in the passenger side is a Brexit supporter, and in the back is pretty much everyone else warning of the oncoming wall. And the Brexit supporter and the Brexiteer are just full throttling towards that wall. And as always, when Brexit meets reality, reality always wins. So anyway, they continue. Indeed, the UK is not an emerging market status yet. The pound remains relatively heavily traded, and the UK government debt still has a high demand. There doesn't seem to be any unwillingness to buy and hold UK government debt, added the USB economist Dan Turner. Moreover, the UK remains the world's sixth largest economy, and the pound represents 4.4% of the world currency revenues, according to the International Monetary Fund, suggesting that many traders still want to dabble in it. Still, Britain's leading role in Europe and the globe is clearly falling. We don't think there's any risk that the UK is suddenly going to be viewed as an emerging market, said Taurus Payne, the EU economist at the research firm Capital Economics. But he cautioned that Brexit and the government response to the COVID-19 pandemic will weigh on confidence. Sharma and Kelo similarly warned that Britain's final exit from the EU is likely to permanently alter the way in which investors view the pound. Adding to pressures, Prime Minister Boris Johnson must now come up with new trade agreements with the EU, the country's top trading partner, in less than 6 months. Meanwhile, the UK is locked in deep recession and deaths of COVID-19, now at more than 44,000, and it keeps rising. Major companies like British Airways, Rolls-Royce, EasyJet and others have enacted tens of thousands of job cuts. Stimulus programs by the government, including wage subsidies, have been criticised as insufficient to stem the tide for huge job losses. The Bank of England has predicted that the British economy may contract by 14% this year, and the worst performances in more than 3 centuries. Britain's debt picture is also darkening. The country carries a huge current account deficit of 25.9 billion as of the first quarter, and as well as a worsening financial deficit. After the Chancellor of the Exchequer, Rishi Sunak, recently introduced another 37.8 billion stimulus package into the fiscal studies. The Institute for Fiscal Studies, an economy think tank, forecast that this latest spending programme will push the financial deficit beyond 37.8 billion, easily to the highest percentage of income since the Second World War. Sharma and Koyi have insisted that Britain's current account deficit and its financial debt together will be greater next year than those of Mexico or Turkey. Forbes recently characterised the British economy as broken. The numbers are there are incredible, wrote Clem Chalmers. Overall, tax income is down 28%, although some reports state that they are way higher. Sales tax is down 46%, and employment tax is down 29%. Government debt levels have exploded beyond 101% and have headed up vertically towards perhaps 120 by next year. Chambers further warned that every day that passes is digging a bigger and bigger pit for the UK economy, and to hear that the British Prime Minister say that spending will continue on government services as if nothing has happened, and in the same breath talk about managing finances prudently, is hard not to be struck with complete cognitive dissonance. Chambers is predicting that things will get much worse in Britain, with rising company insolvencies and climbing unemployment, as well as hyperinflation. On Friday, the currency ratings agency, Moody's, said that the UK will suffer its worst economic downturn this year among the G20 nations. We forecast a contraction of 10.1% in the UK's GDP for this year, but expect a gradual subsequent recovery on the back of the easing of lockdown measures, with growth rebounding, they hope, at 7.1% next year, hopefully. Plus, Britain's deficit and public debt ratio are expected to deteriorate even further on the back of borrowing funded stimulus measures amid lower tax revenues. Is that the end of the article? Yeah. So there you have it, folks. Something incredibly worrying, and it's laid out very, very clearly there. And it all started in 2016. And what happened in 2016? The Brexit vote. And what have we been doing for the past 4 years? Nothing but Brexit. Our next decade will be dominated by Brexit, like it or not. You may be fed up of hearing about it, but it's not going to go anywhere anytime soon. And indeed, the only way to reverse some of what's happening to the UK will be to rejoin the European Union. And trust me, the appetite for that will be there. People will remember, we never had this problem when we were in the European Union. And of course, as I've said it now, a lot of people that are supporting Brexit are starting to get very cold feet. They're starting to say, this isn't how we should be Brexiting. As I've said, I'm still waiting for it. That space, you can see it quite there on my wall. I'm waiting for it. Of that article from either Daily Mail, Express, you name it, the headline, this isn't the Brexit we voted for. Just waiting for it. It's going to happen.